Recently, I have been appointed as Deputy Governor at the Central Bank of Turkey, and one of my responsibilities is to deal with G20 matters. During the G20 meetings I have attended so far, I heard so many times the following phrase: strong, sustainable, and balanced growth. As you know that in the aftermath of the global financial crisis, precisely in 2009, the G20 member states, you know that Turkey is one of them, launched a framework for strong, sustainable, and balanced growth. Almost 3 years later, the focus today is less on growth, unfortunately, but mostly on solving the overhang of that left over from the crisis, that global financial crisis. Yet we can all agree with the aim of the G20 member states that the real solution to the crisis and the current period of instability is implementing the aforementioned framework for strong, sustainable, and balanced growth. No amount of debt restructuring can create prosperity. Only vibrant economic growth can do that. Like other monetary authorities around the world, the Central Bank of Turkey knows that strong, sustainable, and balanced growth at local levels rest on three key pillars: boosting productivity, fostering competitive businesses, and strengthening the efficient functioning of financial institutions within transparent financial markets. As central banks, we all work to promote these three pillars in our individual countries. I'm pleased to learn that GCEL, Global Coalition for Efficient Logistics, is working on a global initiative that strengthens not on any pillar, but all the three at once. Today, I will be giving a brief picture on how we can achieve sustainable growth built on these three components in the near future. Central banks are important overseers of economic progress. Our mission is quite simple: promoting sustained and balanced economic growth, fostering price stability, and ensuring sound, effective financial markets. Achieving this mission is never easy, yet over many decades, central banks have learned a powerful lesson. Innovation unlocks growth, unlocks powerful gains in productivity, and makes central banks' job much easier. It helps businesses produce more output, promoting economic growth. It drives down consumer prices, providing a strong guardian of price stability. It helps capital move more freely while making our banks stronger. Above all else, producing more with less is the only proven way to increase the welfare of people. And the result is what matters the most to every policymaker. Our world has explored the power of digital efficiency for a quarter century or more. But the real promise of tapping the true digital economy has remained elusive. The G8 forum that was held in Paris this year is a strong reminder of this reality. If we consider where the global economy stands today, there has never been a better time to unleash the huge productivity gains the digital economy can supply to Turkey, the region, and the world as well. If we can find a way to deliver the true digital economy, the resulting productivity gains will touch every corner of the economy and make easier the job of every economic policy officials and including central bankers. It will reduce the cost of trade, lowering the prices to consumer and promoting price stability. It will raise the productivity, the manufacturing and services sectors, boosting economic output, and it will make every bank more efficient in supplying credit, promoting strong economic growth in the process. To a considerable degree, the economic growth in Turkey, the Euromed region, and the world rest on the competitiveness of our businesses in general and our SMEs in particular. SMEs are a critical source of innovation we just discussed, and they also create most of the new jobs in our economy. Empowering entrepreneurs also provides the best assurance that economic growth will extend economic progress to as many people as possible. If we are put this region back on the road to prosperity, therefore we simply must move past the discussion on debt structuring to pressing the needs of the making our SMEs more competitive. At the Central Bank of Turkey, we focus mainly on the macroeconomic economy, obviously. Yet we also know that macroeconomics outcomes are a result of aggregating across millions of individual business decisions. By making Turkish businesses more competitive and more connected with global markets, Turkey's economy can grow more rapidly and sustain that growth over a longer period of time. However, we are aware that SMEs in Turkey face big challenges. They must find ways to cut costs that typically run much higher than their bigger competitors. They must also find ways to sell their products in global markets. And above all else, they must obtain financing in order to overcome these challenges. SMEs need better business decision tools, digital tools, powered by real-time information. The problem is such tools are simply beyond the grasp of SMEs. They cannot afford to buy the sort of tools for which major corporations often spend millions of Turkish lira. Hence, there is an urgent need for new initiatives to help SMEs tackle these difficulties and be part of the solution to the global sustainable growth. Central banks are also custodians of sound financial institutions and effective financial markets. It is not surprising that central bankers in many countries have been focused on shoring up the capital base of banks in the wake of the global financial crisis. I'm pleased to say that Turkey's banks have remained very strong throughout a time of turbulence elsewhere. But in Turkey and the rest of the world, we must always be focused on providing banks with the tools they need so that they can accomplish what they do best, supply capital at a competitive rates of interest. Just as innovation can drive a more productive economy, so it can make our banks stronger and our financial markets more effective. Indeed, banks face two major challenges in the 21st century: expanding their markets for financial services and reducing their risk from lending. Innovation is critical to answering both challenges. Global initiatives developed by GCEL and others should be very welcome in this regard. It will also allow Turkey's banks to identify promising business customers, not only here, but also in other promising markets around the world without investing in physical infrastructure. Moreover, the same digital platform would arm lenders with real-time validated information on their loan collateral, and this would reduce risk at a point in financial recovery when risk remains an overriding consideration to bank regulators, as evidenced in the recent Basel III regulations. The Central Bank of Turkey is committed to supporting strong, sustainable, and balanced economic growth with price stability. We are also committed to ensuring Turkey's financial institutions strong and its capital markets operates effectively. When much of the region still focused on the financial crisis, we believe that it's a time to look forward and put the focus where history has proven over and over again that real economic progress lies, harnessing innovation and unlocking a tide of productivity. This is why we are here today, and I look forward to learning more today about how human wealth can provide the benefits of digital efficiency to banking system and as well as SMEs. Well, thank you very much for listening.